Sterling declines as the Bank of England leaves interest rates on hold at 0.75%. There's a couple of reasons why the pound slipped today, despite the fact that the Bank of England left interest rates unchanged at 0.75%. The first of these is to do with the voting patterns. At this moment in time, there are 9 monetary policy makers at the Bank of England. 2 of these voted to cut interest rates by 0.25%. This is against market expectations that all 9 would vote to leave them unchanged. This is seen as being a little bit more dovish and increasing the possibility that we'll get an interest rate cut from the Bank of England in the near future, which typically weighs on the currency. The second of these relates to the inflation report. Now, in the inflation report, we had new growth forecasts, and these were lower than at the previous meeting. And again, this does suggest that the Bank of England may be forced to cut interest rates sooner than expected. Creating growth forecasts is notoriously difficult even in ordinary times, but when you're contending with events like Brexit, an election and a trade war, it's increasingly difficult. Now, Mark Carney was repeatedly questioned about what influenced the downgrades to their growth forecast, particularly around Brexit. He did allude to the fact that slowing global growth was having an effect on the UK economy and didn't want to be drawn into political questions. As we've seen in the past, this does tend to land the central bank in hot water. Interest rate expectations going forward have lowered slightly, but it's worth remembering that there's an incredible amount of uncertainty that still lies ahead, even over the next few months, whether that be the election, whether that be the Brexit deadline on the 31st of January, or the trade war and the economic slowdown globally. So a lot can change over the next few months, which will influence policymakers and will influence market expectations. In the near term, though, we have seen a little bit of softness in the pound, and if we continue to see more interest rate cuts being priced in by the markets, as we've seen from other central banks, you would expect that to continue to weigh on the currency. But it is always worth noting that there are so many different factors influencing the currency right now, both domestic and globally, that this is not a guarantee. If you enjoy these videos, don't forget to like, subscribe and turn on notifications, and leave any feedback in the comments box below.